Hi, everyone, and welcome to Montaka's quarterly update. This time coming to you from just outside New York City. Well, global equity markets continue to be dominated by the unusual mix of economic parameters that have characterized much of 2022, a year that has been pretty unpleasant for investors. And we are seeing extraordinary volatility. In the September quarter, for example, the S&P 500 increased by 14% in the first 6 weeks and then declined by nearly 17% in the subsequent 6 weeks. So, what is Montaka doing in this environment? Well, Montaka's investment team has spent the year continually evaluating new investment opportunities. And for sure, we have identified many advantaged businesses that we assess to be significantly undervalued across a range of different industries. But so far, we have chosen not to invest. Why? Because while these new opportunities might have a good amount of upside potential, we assess that this still falls short of the significant upside potential that exists in the businesses that Montaka already owns today. So it's certainly a strange situation. We are seeing really advantaged businesses that were previously undervalued, in our view, become even more undervalued as the year progresses. And so in such a situation, we have assessed that the right course of action is essentially no action at all. And this is why the composition of Montaka's portfolio has remained largely unchanged so far this year. As is well known by now, central banks around the world are hiking interest rates in an attempt to slow spending and lower stubbornly persistent inflation. As of today, the EU is in a recession, as is China, most likely, due to the COVID lockdowns. And the US is getting pretty close to a recession if it's not already there. But there is some good news. Evidence suggests that we may well be approaching an inflection point in the outlook for important economic parameters such as inflation. For example, this year alone, US mortgage rates have more than doubled, and we're now starting to see a significant slowdown in the US housing market. At the same time, the cost of US government borrowings has more than tripled. And with around 30 trillion US dollars of debt outstanding, as these borrowings are ultimately refinanced, this extra interest expense will amount to around 1 trillion US dollars every year of government spending that will need to be withdrawn from the economy in order to service its debt. So what does all of this actually mean? Well, put simply, we believe that the US economy, the world's largest economy, cannot sustain interest rates of 4% or more. And we see these interest rates coming down over time. And with so many advantaged businesses with large market opportunities looking very undervalued today, we conclude that 2022 actually represents a significant investment opportunity. As the major economic headwinds recede over time, as we believe that they will, valuations will likely re-rate upwards. In our quarterly letter, and also included in the September edition of Montaka's Monocle, is a case study on Spotify. We share why we believe the earnings power of this business will be much higher in the future than it is today, and why, therefore, we believe its stock is significantly undervalued today. In closing, we take this opportunity again to thank you for your partnership and patience in this ongoing investment journey. We understand that 2022 has not been pleasant for investors, but we reiterate again our belief in the simple formula of owning highly advantaged businesses with large market opportunities while they remain undervalued. Over long periods of time, we believe this simple strategy will work out well for investors.